In response to the Russian invasion in Ukraine in February of 2022, the U.S. government and its allies began imposing sanctions on Russia. So our allies and our partners did this in concert. They did it together, and they implemented significant trade sanctions.
Before we get started with the show, here's a quick word from our sponsor, Global Training Center. As trade compliance professionals, you want to make sure that your procedures and documentation are completed as correctly as possible to avoid any delays and possible fines. We provide a range of trade compliance courses that will fit your needs. From in-person or web training to recorded on-demand courses, we can train one or even thousands on your team through your learning platform or on our portal. We can even customize a private session for your team. Go to globaltrainingcenter.com to find out more.
Hey folks, we are in for a great show today with Simply Trade Podcast, and we have got some really cool things coming together. But one thing that everybody has, as we are recording this, the country, Lalo, has been undergoing an Arctic blast. So it's like we've all been suffering from it. Me in the Memphis area, we have really, in the Mid-South, has gotten hit hard with, zero temperatures. Literally, I woke up the other morning and we ran out of degrees. We were down to 0 degrees. It's like, okay, I'd like to buy a few degrees from somebody to warm things up. But it's icy roads. We had 3 to 6 inches of snow, depending on where you're at here in the Mid-South area. And then we have ice on top of it, and we had frozen fog and everything else. So it has been a chilly morning again this morning, but hopefully things will start warming up and melt this stuff off. How are you doing, Lalo? You're faring well in El Paso?
Yeah, fortunately, we're very lucky that it's been good. We do fluctuate up and down, but it's been fair. We're lucky. So, yeah, I can't complain. So we can still go out for our walks and runs or whatever anybody does outdoors, hiking and all that. So we're good.
Well, we've had a lot of areas here, a lot of folks here in the area that have frozen pipes that are bursting now that it starts getting a little bit warmer, and then it freezes again. And I anticipate in the next few days there'll be quite a few more that'll be going on. But anyway, hey, listen, we have got a great show today. This is one of those for our listeners. If you do any kind of business internationally, especially if you are financing purchase orders or using letters of credit, or if you are doing some things, this is a show you need to listen to. And it's probably one you're going to need to share with your CFO and with any of your overall accounting folks as well, because of dealing with financial transactions. There are new regulations that have come out regarding what banks are expected to do from a government, U.S. government aspect on any flagging of suspicious activities, financing transactions, and things of that nature that may be suspect, that the financial institutions could be and would be held liable from a government perspective. So we're going to get into the details on that, but Lala, why don't you introduce our guest and then I guess the official topic of what we got here.
Right. So this all started with my banker, believe it or not, here in El Paso, gave me a call and said, she actually called me. Usually these days you get an email or a message, a DM on social or something, but no, she actually called me. She said, "Hey, I noticed your bank profile that you are in trade and blah, 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 et cetera." So she says, "We're very concerned here because we have no idea what this means. Can you help me with this?" And I took a look and was like, well, sort of, and I started explaining to her a little bit of, super high level, especially because I didn't want to overwhelm her. But then I thought, I know Michelle Schulz and her team are like big into export controls and sanctions, and that's not the only thing they do, but I remember her expressing a lot of enthusiasm in talking about that. So I reached out to her and I said, hey, Michelle, can you help me with this? Maybe we can have this podcast, et cetera. And so she brought on one of her senior advisors onto. She said, I'd rather have Kelly, and Kelly, if I messed up your last name, please forgive me. But Kelly McCorkle from the Schulz.
Hey, McCorkle.
Yeah, so from the Schulz law firm to talk about this. So let me, and everybody, please excuse me because this is a very long and confusing term. But let me, I'm reading on the screen. I'm sorry about this, but it says the November 6th joint notice from FinCEN and BIS introduced a new SAR term called FIN-2023-Global Export. So basically, it's financial institutes, like Andy said, being responsible for now doing what trade people do, kind of like the denied party screening and making sure that they're not doing. I'm thinking, so I don't know, Kelly might go more a little bit into this or not, but here on the border, I'm wondering if she asked me because, I mean, sometimes maybe like drug cartels or something might want to set up a business and they're funding it. And, I don't know, maybe she's like wondering how much trouble will I get into this or not? I don't know. Maybe that she didn't go into any details, of course, and I wouldn't even disclose them either, even if she did. But that is what I'm thinking. I mean, of course, there's other things that that we're gonna talk about during the show. But Kelly, thank you. Welcome to the show, and hopefully we have something here that we can help you talk about. I mean, hopefully we didn't butcher this too bad, but and you're not laughing at us here.
No, I appreciate this very much, and yeah, this is a really unique topic for banks, and I can appreciate her reaching out because if you and I'll have a little bit more information, but if you think about a bank, their focus is on financial transactions, and then all of a sudden somebody tells them you have to look at global export transactions. So they're like, I don't even know what a global export transaction has, what documents are there? What do I need to look for? And so we're going to talk a little bit about that today. I want to go through the history of this suspicious activity report that she's referring to and talk about how it came about, and how banks can look at it and implement some measures to check for it. But the other thing is, and Layla, I think you kind of hit it earlier, was that if they're reporting all this, and maybe Andy, it was you, but if they're having to report, it's sort of putting everybody on notice, If you're an exporter and you're trying to evade sanctions, your bank may be turning you in and you may not know. So, yeah, we're going to talk a little bit about.
Well, before we get too far into this, Kelly, let me just say, setting the stage for our listeners here real quick, is that this legislation or regulation, it's a regulation that is being put out by BIS and the financial, what's CEN stand for? I've forgotten.
FinCEN means Financial Crimes Enforcement Network.
This gets into the financial transactions, whether it's financing some things or for an international transaction, like what we mentioned, a purchase order, and you mentioned earlier off camera, Kelly, a letter of credit for freight forwarders, customs brokers, and things of that nature that are engaging in situations where you're dealing with some of that, and it goes through a third party or whatever, and a financial institution comes into play with some of this, as well as I would think the company itself could be self-financing certain things, so they would fall under this kind of regulation. But the point being is, as we're looking at this, you could be, again, a logistics company, a service provider. You could be a manufacturer. You could be, a distributor, where you're buying and selling goods and things of that nature. And these regulations deal with obviously the financial aspect of some situations and completing financial transactions. So folks, as you're listening to this particular show, this is one of those that I mean, you really need to stop and think. And it's like, you're going to be listening to this again. There are actions you need to take to shore up your risk in this scenario, because I guarantee you there is going to be risk associated, especially if you're a small bank, a large bank, or something like that, that you're dealing with somebody. And as a company, as an importer, as an exporter, and things like that, you're going to have to share a lot of business intimate details of a contract, of a transaction and whatnot to complete the financial transaction. You might be doing everything right and everything's great, but you're like, well, I'm not going to share my contract or this or that. And if you don't, that transaction will not go through, and then your whole deal goes, belly up. So as we're looking at this, there's a lot of serious implications here. So we're going to get into this. So Kelly, if I got that somewhat, I got to tell you, this has got me the hair on the back of my neck standing up like a rabid dog ears, like something like oh man, this is serious stuff.
Yeah, well, yeah. So the whole goal today is just to discuss how financial institutions are now going to play a very important role in assisting the trade community, enforcement authorities, and U.S. export control sanctions. Specifically, this started with Russia. So I want to talk a little bit about that. And then you mentioned earlier about the global reach. Again, it started with Russia, but it has now become a broader approach by the U.S. government. So a little bit of background. We're talking about financial institutions. So these are banks and entities that are subject to supervision by any state or federal bank supervisory to the Bank Secrecy Act. So it can be, in fact, even a casino is listed as one of the institutions responsible for reporting. So I thought that was interesting.
Hey, that's Kelly. Have you ever seen? Kelly, have you ever seen? What's the name of that show on Netflix? It's a casino, and they do exactly. They would be subject to this. So anyway, I don't know if you've seen that. It's.
I'm not sure what you're referring to, but yeah. So we have all heard about the $10,000 amount. Typically, if you travel, you need to have less than $10,000. And we've heard that folks that deposit money, they try to circumvent regulations by depositing less than, like they'll break up a large amount into smaller increments. But the banks are responsible, financial institutions, I should say, are responsible for reporting cash transactions that exceed $10,000 in a day. And so that's just part of their normal daily work. There are other reporting that they do, but that's one we're kind of familiar with. But the other thing that they are required to do is report suspicious activity. And those are usually around, again, financial activity, such as money laundering, tax evasion, or something of that nature. Not in the export control world. So you mentioned financial FinCEN earlier, the Financial Crimes Enforcement Network. And we'll refer to that as FinCEN because it's such a long word. Most of the time I'll try to stay away from acronyms though. But this is a bureau under the Department of the Treasury. And it reports to the Terrorism and Financial Intelligence Office. And this is the exact same office that OFAC, the Office of Foreign Assets Control, reports to. So they have similar reasons for getting this information. But FinCEN specifically is responsible for administering the Bank Secrecy Act and other regulatory functions. They have other functions, but they help law enforcement investigate. They look at domestic and international financial crimes, and they look at trying to prevent and punish criminals and others performing financial crimes. But the focus of our discussion today is going to be that intersection. We want to look at where financial institutions that are required to report certain things now are required to report export controls.
With that, let me just jump in again. It's like, so give, maybe the most common, there's going to be several transactions, but what would be the most common financial transactions that we're talking about that the banks, so that they can put it in their mind here of operationally as they're doing business, what area that they will be looking at here is when we're talking about these regulations taking effect?
Banks are already required to perform due diligence on clients. So when someone opens an account, they need to know who they are. There's other reporting, for example, if someone opens an account, you need to find out, like a company, who are their beneficial owners? Are these beneficial owners denied parties? Are they politically exposed persons, which may indicate there's potential for bribery or something of this nature? So they already do some of these things. So they're just going to have to now look at the details, not just the financial aspects, but paperwork that goes along with some of the work that they do.
Getting into it, I was looking at it like, for example, the financing of a purchase order or the transaction of using a letter of credit. Those are two types of things right there. So that as we're talking through that, that's why I'm saying is like, I want people to understand those are just two aspects. There's going to be others, but let's just look at it from those two perspectives. I'm thinking those would be two of the most common and volume-wise transactions that a financial institution would get involved in regarding, export, transactions and things. Would you agree with that, or am I off base?
No, not necessarily, but we'll take, for example, a letter of credit. So a letter of credit, they agree to, someone agrees to pay money for goods received. And the letter of credit will typically have a contract. It will lay out exactly what's going to be transferred between the seller and the buyer. It will lay out how payment is going to be handled or transacted, what banks are going to be used, how the payment is going to be transacted, a wire payment, however that's going to happen. But they will have a bunch of check boxes. There will be a lot of things that have to happen for to fulfill the contract and money to be released. And so the bank will have a lot of information. They'll have this contract. It will probably lay out all details of what is actually going to be sold, the goods that are going to be sold, shipping, who's going to ship, where's it going to arrive at, who's going to deliver it. All of those details will be in that document. So they have access to a lot of information around a transaction.
With the regulations you're talking about, the information they're looking at, in today's world, let's say a letter of credit, are they going to have that extensive of information, or are we talking about that they're going to be needing additional information that will have to be supplied by the company?
They'll have it because they'll
already have this.
Yes.
So they've already got this. I can see from a letter of credit perspective, it would be a case like, okay, here's a transaction and that the shipment is moving. And so, obviously I'm selling my goods. I have a letter of credit that do not want to release the goods until payment is made to the third party, but by the buying party. But the buying party is not wanting to release their monies until they get, control of the goods and all of that. So hence the third party with the letter of credit. I get that scenario. What I'm seeing in this transaction is basically banks are looking at it going, okay, I should be getting the funds at a certain point or releasing the funds at a certain point based on the freight's supposed to arrive via ocean, rail, truck, whatever it is, air cargo. And when certain things are completed, they're looking at it, say, have all of the requirements been satisfied to release or accept the funds? I get that. What I see now, as we are getting into it, before that even transacts, is that the banks are going to have to look at it and assess, are all of the details with this particular transaction nefarious, or are they legitimate and can continue on? So there's like this neutral party in a sense with the financial side of it, that they're not involved necessarily with your business, knowing what you're selling or how what the commodity is and those kinds of things. But yet they're going to have to make an assessment to say, is this suspicious activity or not? If I got that.
You're hitting the nail on the head. But my first comment would be that banks don't have to scrutinize everything. But they have, right. But they have to have a means to do it. And so maybe if it's a known client, they do the same thing over and over and over. Well, they're used to that. But what if that client all of a sudden starts using a new freight forwarder, or starts shipping it to the same end user but to a different country, and then to those sorts of things? Those sorts of things are the red flags that would then indicate I need to go look at this.
Well, and that comes into like a routed export transaction comes into play, where somebody could, do something in there. And then again, if a bank's got their hand in that, they're going to have to look to see what's going on with that. All said and done, so why don't I stop asking the questions and let you go ahead and go through and jump on there? Because I'm looking at it. There's a lot of good discussion in this, but I see it more from the application here is that there are questions and I guess scrutiny that banks are going to have to engage in that they're not normally engaging in today. In the past, and as the new regulations take effect. So, all right, I'm going to shut up, let you go do your thing, Kelly.
All right. So I'm going to repeat my slide here, and then I'll continue on. So the focus of our discussion today is really the intersection of financial institutions reporting suspicious activity and export controls. So before, they've been looking at money laundering, tax evasion, financial crimes, and now they are going to have to be looking at export controls. It's not in their wheelhouse. They don't have a lot of knowledge about what to look for an export control violation. FineSyn has set up the capability for them to report suspicious activity. They already do it for financial crimes. It's called a suspicious activity report, or an SAR for short. And banks or financial institutions do these routinely for other activities. But they're filed electronically on the FineSyn website. And every time they file one, they have to assign a key phrase. And the key phrase is called a key advisory term. And this then designates a particular type of activity that they are reporting, so that FineSyn knows, okay, this goes in the $10,000 bucket, this goes in tax evasion bucket, and so on. So there's different purposes. But I want to back up just a little bit and talk to you about the Russia invasion of Ukraine, because this is where export controls kind of got started. And this is where banks then were pulled in. So in response to the Russia invasion in Ukraine in February of 2022, the U.S. government and its allies, global allies, began imposing sanctions on Russia. So our allies and our partners did this in concert. They did it together, and they implemented significant trade sanctions on Russia, which is exports of software, technology, and goods. And OFAC, the Office of Foreign Assets Control, then created the financial sanctions. So, for example, they blocked certain Russian banks. They prohibited correspondent or payable account processing, and singly, the U.S., I want to throw this in, applied these to Belarus too. So we're talking Russia, but for the U.S. side, Belarus is included.
And just so folks understand, you look at the Belarus is next door to Ukraine and Russia, so they border along there. So geographically, just looking at it,
they have been known to assist.
yes, and they seem to be very in cahoots with Russia here. So just again,
Absolutely. So FinCEN, with these sanctions came about very quickly and were implemented very quickly. So FinCEN, in order to make financial institutions aware of potential efforts for Russia now to try to evade sanctions going through banks, they released what they called alerts to the financial community. So they released 2 in March of 2022 and 1 in April of 2022. The alerts are fantastic. They are very concise. They contain a lot of information. They have a lot of references so that the reader can go and dig in a little bit more to understand exactly what's happening. But just briefly, they talk about financial sanctions compliance, the background on why the sanctions were implemented. They give financial institutions red flags, indicators, what to look for, the way Russia may try to evade financial sanctions. They talk about the significant activity report that we're going to continue to talk about in a moment, and how to file those, and some due diligence that financial institutions are obligated to continue. Again, this is part of the financial institution's responsibility in filing this suspicious activity report. And I talked about the key term. So the first one was on financial sanctions themselves. The second alert talked about luxury goods. So now we're talking about something different. So banks could understand that now they need to look at something different. And then the third one had to do with corruption. Public corruption. But now we're getting more into the meat of what we're talking about today. In June of 2022, FinCEN and the Commerce Department, which is part of the Bureau of Industry and Security, released a joint alert. Now they're requesting financial institutions to be vigilant in watching for export control evasion activity. So this is not something the banks have done in the past. They've been looking at financial activity and for odd happenings that may indicate other things, but not for export controls. So this was new, and it was it's a first of its kind joint alert. And the key term used here was Russia BIS. So when financial institutions file with FinCEN, they key it as Russia BIS. The joint alert also gave background of what export restrictions apply to Russia, talked about commodities of concern for possible export control evasion, because we've heard all the stories about Russia needing items for military purposes, and how they're ransacking commercial items to get these things. And then, again, a list of red flags to help the financial institution look for potential export control evasion. And if you look at the whole, financial institutions are really uniquely situated in the transaction. They're assisting exporters in conducting business, but they also have access, and we talked to Andy earlier about how much documentation a bank may have specific to an export transaction. So we talked about letters of credit. They know that wire transfers, they need to be checking the origination of those, correspondent accounts where there's multiple movements of funds, lines of credit for businesses, like if you have a business client and they're in a certain business, and now all of a sudden you see a lot of activity in their account, they're exporting where they weren't before. Or their business was exporting, but it all went to South America. Now, all of a sudden, they're shipping to Hong Kong or they're shipping to the UAE. Something out of the ordinary. And so that's what the alerts were provided for, to help financial institutions understand what they have and how to use it to potentially look for export violations. And again, these are all potential because the bank doesn't do the investigation. They just file the report and say, this is what we have, and this is what we think it might be in concert with. Export documentation also, if they're helping with financing, letters of credit or a line of credit, they may have the whole package. They may have the end-use certificates. They may have knowledge of the export documents, exactly what was exported, and contracts.
Is that it would be a red flag, would be somebody where you have the transaction, everything's going well, and then in mid-shipment, there's a reroute request going in, and that is a major red flag, and that's one that, you need to look at it and stop all scenarios there. And so in looking at it, this is one of those things too, from a government, from a company perspective. You could have people out there, they're working on, getting a sale and whatever. So your sales folks are out there and they close a deal, working on it as it's going through the process. Then all of a sudden there seems to be this tight timelines, almost unrealistic, trying to get the transaction pushed through fast and get the goods going and whatnot. Again, if it looks like it's a great deal, but then all of a sudden there are people being unrealistic with the delivery times and whatnot, that could be a red flag that says this requires greater scrutiny. And in the end, here's the other thing: is that okay? The transaction may go through, because of acquiesce to the pressure or whatever, and the transaction is completed or whatever. But in the end, you may be out the goods. The bank is held liable, and the monies are out there, and somebody's going to get come into a loss, or even if you get paid for it, but then there's the risk where this turned out to be a nefarious bad situation. So it's now you've got everybody's kind of covering their tails here on this one. It's like you're better off to do the due diligence up front. I will say, due to time, we need to kind of wrap this up. But I get, as I'm looking at this is one of those that, folks, you need to look at it from a company perspective, from a financial perspective, definitely on the financial side of things. If you are a company that's financing parts of supply chain, UPS, FedEx, and some of the others do that. This comes into play. Some of the big logistics companies and all that do some of those kinds of things. There's a new aspect here that, from a financial perspective, you may be doing due diligence in the service provider end, but from a financial, it takes on a little different. So with the banks and all that, this is one of those that you need to engage in some strategic planning and risk assessment. It would be good, and my suggestion would be to engage in some experts. Case in point, the Schulz law firm there. I love y'all. Y'all are fantastic. Folks like, myself and others, I'm not trying to be a self-promoter here, or some other consultants that out there, just engaging in this discussions. It may come back and go, we're in good shape. You're fine. But it would be one of those, just to engage in having somebody being able to have the knowledge is, well, let me ask you this question, or have you looked at it from this perspective, to challenge that. So if you're an executive of a freight forwarder or logistics company, if you're a company that is doing business internationally from a selling of goods or services, and especially if you're a financial institution and all that, this is one of those that you need to pull the right parties together, sit down and have a conversation and look at this. I guarantee you almost every single entity out there has got some action to take on this, but Kelly, if I wrap that up pretty well as far as the next steps, what should I do with what we just talked about?
Yes. Banks, financial institutions. I'll just throw these words out there: training. Because, like you said, find somebody who can help you understand and how to implement some controls for export violations. I mean, again, it's not intuitive. So do the risk assessment. Where are your highest risks in your bank, and focus on those. Some simple ones, denied party screening, you're already doing that, but just make sure that any new screening list that's released, it's implemented and you're screening against it. Make sure that your screening software rescreens frequently. There's a lot of little things that can happen to make it better. And again, the Bank Secrecy Act requires them to have this infrastructure in place. They're already doing a lot of it, but it will require a lot of details, a lot of processes, procedures, training to implement new things specific to export controls.
Right. And you're going to need to either outsource for some of this knowledge or at the same time develop your own staff in the financial institution on when you're looking at the paperwork. What am I looking at? What should I be looking at? Case in point, Incoterms. Everybody talks about international commercial terms of sale or Incoterms. But on that is that, well, then as I'm looking at this, how should the bill of lading look? How should the commercial invoice look? What information should be synchronized between the bill of lading, commercial invoice, and even the packing list? And is there something in that is not adding up? If there is a shipper's letter of instruction, does that match what the shipment paperwork has? And then you have the contract. Well, based on the contract, does the Incoterm correlate to the contract? Because a lot of times people, look at that and they'll just put in just about FOB on everything. And when in fact, there should be something here. This is an exports transactions or the old DDP, duty delivery paid, or DAP, and all that. All those kinds of things come into play. So, good night. I'm telling you what, there's a lot to this. It's not the sexiest topic around, but I mean, it's one of those that really comes into play. And folks, I hope that you understand this is a very serious new regulation that has been out for a few months, but it's one of these things that needs to, you're going to have to enhance your procedures on how you do things, what you look for, and those kinds of things. Kelly, I appreciate you being on with us. And Lalo, I'll tell you, some of your courses at the Global Training Center come into play here as well for somebody to get up to speed on some of this. But this is a whole new aspect on some things. So it's has a lot of very deep implications here too.
Yes, it does. Yeah, and yeah, you're right. We do have quite a few courses on exporting and EAR, and I mean even ITAR, I guess, if someone might need to look at that. But yes, they can just reach out and we'll figure something out on our end.
Well, with that, folks, I hope you have a good day, and then we will have contact information from the Schulz law firm for Kelly and that firm. There's others that you could look for, or you can send notes to Lalo or myself, and we'll be more than happy to try and answer your questions or point you in the right direction to the appropriate resources. But for that, for now, what we're going to do is sign off and let you have a great day.
Thank you, Kelly.
Yeah, this was great.
Thank you very much for joining us. Simply Trade is brought to you by the generous contributions of Global Training Center. You can follow the show and GTC on LinkedIn or Twitter and other social networks. Make sure you check out the show notes in the description for a full rundown of today's show with all the important links. Also, make sure that you share this with a friend and subscribe on your favorite streaming platform. We really like hearing from you. If you enjoyed the show, make sure to rate and review wherever you listen to this podcast. If you or someone you know would like to be a guest in the show or would like to sponsor Simply Trade or suggest any topic you would like for us to discuss, please contact us via email at simplytrade@globaltrainingcenter.com, or you can DM us on Twitter at simplytradepod. Thank you again for the privilege of your time. Happy trading. Simply Trade is not a law firm or an advisor. The topics and discussions conducted by Simply Trade hosts and guests should not be considered and is not intended to substitute legal advice. You should seek appropriate counsel for your own situations. These conversations and information are directed towards listeners in the United States for informational, educational, and entertainment purposes only and should not be substituted for legal advice. No listener or viewer of this podcast should act or refrain from acting on the basis of information on this podcast without first seeking legal advice from counsel. Information on this podcast may not be up to date depending on the time of publishing and the time of viewership. The content of this posting is provided as is. No representations are made that the content is error-free. The views expressed in or through this podcast are those of the individual speakers, not those of their respective employers or Global Training Center as a whole. All liability with respect to actions taken or not taken based on the contents of this podcast are hereby expressly disclaimed.